What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 14th of 2017. Well, folks, as you all keep up with the channel, you know that from time to time I like to share a trading tip here on the DataDash channel. And today, I'm going to be talking about 3 misconceptions I hear a lot inside the crypto community for beginners. I see a lot of people moving into this kind of innovative, exciting market, and a lot of people want to step in and they start investing or trading, both ends. It doesn't matter if you're just investing or trading. And a lot of people come in with eagerness and excitement, and they end up losing money because they have preconceived notions of the market and how it operates. And, I get it. I understand it's an exciting industry. People want to jump into it. But if you can't learn from the mistakes of the past that are very clear and open, and listen to the stories of fellow individuals who've been there. I've made those mistakes. I've been in the markets of stocks for 6 to 7 years now, and now in crypto for the past year. And because of that, I've learned a lot about how these markets operate. So today, I thought I'd give you a little bit of a shortcut answer to misconceptions of the market, how to avoid these misconceptions, and why you should at its core. All right, so let's go ahead and jump right into it, folks. The first one I want to talk about is, in a lot of traditional cases, we hear about what comes up must come down. And I generally agree with this. I think most things eventually will have pullbacks. This has been proven in markets that once something has a very nice run up, for example, we see here with Stratus, has a fantastic run up, you can expect a pullback eventually. Things always pull back at one point or another. Nothing's ever just going up exponentially. It's never happened in a market, at least in the long term of things. However, there is something to keep in mind. The opposite is very far from the truth. A lot of people think that just because something has gone down extensively, it will go up. A lot of people always mention to me like Nick, what do you think about this coin? I'm like, the chart doesn't look good on that. I wouldn't buy that. And like, but it's really low, Nick. You say buy low, sell high. And the thing about that's different between buy low and sell high. Buying low does not guarantee something is a good buy. It does not guarantee that it is going to go up, or that you are going to make money off that investment. The reason that is because, in general, things in the crypto space, where it's especially something so early on, the mass majority of cryptocurrencies out there, which are now in the thousands, are going to lose. They're not going to they're not going to build any value in the long term, and they're going to go practically to zero. That's just how it is. And a lot of people will simply just buy on the low end thinking that they're completely fine. It's not true, and it's just as unsafe to do that as it is to buy at fresh highs. So again, you have to have strategy when you're buying something. Now, you do want to buy something at a low. You want to buy something once it's had a pullback. But if something's down 95%, there's probably a reason for it. There's probably a reason something has lost that much of its valuation. And that doesn't always mean that it's a good time to just, pour some of your savings in there and just say, oh, let's see how it goes. I bought low. Again, buying low and selling high is great. But just because something is continuing to sell off, you could lose a lot of money. I'll give you an example here on the Stratus chart. If you would have bought Stratus literally just, about 3 weeks ago, and not even a full 3 weeks, it was around 100,000 Satoshis. And people will now picture these two candles right here did not exist. And we were here at around 10,000 Satoshis. Now you'd be thinking, oh man, I'm buying at a low. This thing was at 460 something thousand Satoshis. I'm getting it at 100,000 Satoshis, man. I'm getting this at a discount. And then you're down 50%. So again, you have to have strategies in place to really mitigate your risk. Set stops and really see, how much am I willing to lose? Even if I'm buying at these lows, always expect that something could go down. Things could go wrong because they usually end up doing that, especially in your beginning stages of investing in trading. All right. So remember, just buying something low does not guarantee you're going to make money. The next thing I want to talk about is something that it kind of irritates me, but I get it because I had the same misconception before I started trading stocks. It's a very common thing by human nature because we look at items like stocks and cryptocurrencies like we do when we go to the store to buy a product. We look at the price tag. There's a big problem with looking at the price tag in dollars or even in Bitcoin when you're buying something on the market. A lot of people say, man, Nick, like Bitcoin is really expensive. I don't know if I don't even have like $1,000 to buy a fraction of a Bitcoin. Many people don't know. Of course, you can buy fractions of cryptocurrency. I'll mention that as well. But the thing is, a lot of people are like, I don't even have like enough to really like, make any serious money off of it or anything like that. It's way too expensive. Like I don't want to pay 5,000 something for a single Bitcoin. And then I get people, I'm like, okay, then what else are you interested in? And then I say, well, yeah, I was looking at Dogecoin recently, and it's like, it's not even like 1 cent. Like, what if this became the next Bitcoin? I get that a lot. And it's never going to be the next Bitcoin. It's never going to be worth $5,000. And there's a reason for that. It's because the dollar amount, or like the dollar valuation of Dogecoin and Bitcoin are not determining its valuation. They're not. What's determining the valuation is its market cap, okay? This value right here, and you can see they're quite different, and it's for a good reason. And now you could have a debate about which cryptocurrency is better. I would assume most people would say Bitcoin, but if you're a hardcore Doge fan like I am, just kidding. Again, the major thing that you want to take away is how a cryptocurrency is valued. You should never be looking at this or even the Satoshi mark and saying something is overvalued or undervalued. What you do want to look at is its market cap. On a fundamental sense, you want to look at the numbers and see its market cap, because Dogecoin's sitting at 122 million, Bitcoin's sitting at 95 billion, okay? Now, to be fair, you've probably got much more room for volatility and growth with Dogecoin within a short period of time, but just as much with the growth side, you have that with the loss. But the real thing is here that I'm really trying to drill in is how valuation is calculated, okay? So I'll explain it very simple. It's the USD price in this case. If we're measuring our valuation in US dollars, in this case 122 million, how we calculate that is by taking the circulating supply, all of the Doge that's out there right now, okay? So every single bit of Doge that's been generated, and that of course will grow over time with new supply, that number multiplied by the current market price, okay? And that gives the valuation that we're given. Same with Bitcoin. We have 16.6 million Bitcoin in circulation, and each one is worth $5,759 at this given moment. Because of that, we are able to calculate a valuation a little under 96 billion. Okay? It's very simple math. It's a simple multiplication problem between the price on the given market and the supply. And that gives us market cap or market valuation. And that is what you want to look for. You have to ask yourself the question, do I think Bitcoin as a whole, not one Bitcoin, but as a whole, is worth almost $96 billion? Do we think it's worth that? Now, honestly, some people think it's worth much more, and some people think it's not worth that. That's all subjective. It's up to you to make that decision. Same with Dogecoin. Do you think that Dogecoin is worth 122 million? Not a fraction of a penny. That doesn't matter. That's irrelevant. Doge could cut half of its supply, and the price will jump up tomorrow. And it might be something, it might double its price because you're cutting the supply in half. And that's simple supply and demand economics. So, same thing's applied with cryptocurrencies, much like it is with stocks or anything else. All right, and the last one that I hear, and this one, as you all know, I love long-term investing, as I always push it for you guys. I mean, you can do trading. I love both ends of it. But the big thing I always tell you all is diversification. I don't care if you're day trading. I don't care if you're swing trading. I don't care if you're long-term investing. I don't care if you're going to long-term invest in the sense of just buying some stuff and never even touching it until you want to retire. Okay? It doesn't matter what position you're in. If you do not diversify, you are set for failure. Okay? Now, you might be the oddball that picks one cryptocurrency or one stock and just goes absolutely bonkers in the sense of your gains. You do really good. But I hear so much in the community, whether it's someone who's at like $200 in their portfolio, and they're like, hey, man, I'm just going to gamble it on one cryptocurrency. Or, oh, yeah, I'm just going to put it in this one stuff. I think it's going to be the next Ethereum. How can you be sure that it's going to be the next big coin? Especially in a market where not only is it extremely hard to find what is going to be the next Ethereum, a multi-billion-dollar cryptocurrency, but also, how do you know that you can solidify that in a market where over 90 to 95% of cryptocurrencies are going to fail in the long term? Would you like those odds? Would you like to, consider yourself as I've got a 5 to 10% chance of actually making a return in the long run? I mean, I don't think anyone would want to put themselves in those shoes, but they don't take that kind of backwards kind of step and then take the whole picture and the perspective of the risk you're taking in that case. We don't want risk to that degree. We want to mitigate our risk. We want to diversify. We want to have a multitude of holdings. And the way you do this in a very general explanation is picture, for example, we find 10 cryptocurrencies we're going to invest in, okay? If we take that same mindset, let's say that 9 out of 10 are going to fail. You would still say like, well, Nick, that just doesn't sound very good. Like, I have one or two coins that might like make it in the long run, and all the rest are going to fail. Yes, that is most likely going to happen if you invest this early on in cryptocurrencies. Now, there are certain safety measures you can set to, like, for example, stops to mitigate your losses, and then you can take that and put into something else, and then you might, eventually start picking out some winners. However, if you put it all into one, you're going to probably lose everything. If you put it into 10 and win 1 or 2, those 1 or 2 winners in the crypto space, being so early on, are going to go up exponentially. Okay, they are going to be winners for the long run. And when crypto markets are a multi-trillion-dollar market in the way future, you're not going to be worrying about, oh, I lost some money on Digibyte, or I lost some money on Monero or whatever. Those 8 out of 10 holdings, because those were so small. Even in the trading scheme of things, if you do this amongst 10 different coins, I can guarantee that in most cases you will win with those 2 winners, 1 or 2 winners, than you will with the losses of those 8 others. And especially if you put some safety measures like stop limits. So again, you have to apply it to your kind of strategy, but this is more of mindset, okay? It's very kind of general stuff you should keep on applying every time you do trading and investing, because these misconceptions will burn you, just like they have everyone else in traditional markets and in cryptocurrency. Cryptocurrency is no different. It's the reason why its charts and everything operate just like a stock market. You have 2 comparative things, whereas stocks are US dollars to cryptocurrency, we have altcoins to Bitcoin. And you've got to treat it in the same way, okay? Nothing is guaranteed to just keep going up. So we don't want to, again, buy just things that are low. We do not want to look at things determinative of their price value in the sense of US dollars, and even Bitcoin as well. We want to look at their valuation and market cap. And we also don't want to go all in on something. These are very common patterns, and I pray that you all will not fall for these traps, as much as it can be eager to do so, as much as the gambler's mindset will kick in and tell you to do this, and kind of the shopper mindset in the sense of like looking at the price. Again, these are really good principles to learn early on to make sure you avoid those mistakes. And if you can have a trading history or an investing path in your life and throughout your journey of cryptocurrency where you avoid all of these, oh my gosh, you are so fortunate, because most people continue to fall for it. I know I did. I was like, come on, I could just buy into this. I remember when I think actually, I'll be fair with you all, I think I remember exactly my first penny stock I bought when I was buying, trading, stocks and everything when I was very young. I thought I was going to be the one oddball out and everything, and I thought I'd win it. And luckily I didn't put too much money in it. I was young at the time, and I learned it very early on. So it's best to learn these things early on. Avoid making those mistakes. Okay, I'm going to stop rambling. I just want to let you all know, because I think traders and investors mindset is important to build early on, so you'll be successful in the long run. All right, everyone, that's it for the video. Thank you all so much for watching. If you guys have a question that you're dying for me to answer, leave it down in the comments down below, or you get a technical indicator you want me to cover on the channel. That being said, though, everyone, thank you all so much for watching, and I will see you all in the next video. Stay tuned.